Okay, can I presume you can all hear me? Yes, okay, good job. So thank you very much for inviting me. As my maths master would have said, I went to Sachs, that this presentation is exactly the same as the last one I gave, but slightly different. Years have gone, experience has changed things as well. So I'm going to give you some of the slides. I'm happy to take questions, as Lisa said. And let me also start by saying thank you to you, Lisa, for inviting me again. I hadn't had an invitation for so long. I thought you guys had forgotten about me. All my talk was so bad that you never wanted me back again. So thank you very much for having me back. And I must compliment you guys on what you do at ORT and the mentorship that you're giving to a lot of people around in the community. So thank you to you guys, and thank you once again for inviting me. So let me tell you a little bit about cash management. What would we define as being a cash flow? And why is it so important? Why is it so critical to any business? And that's what I'm going to go through and give you some tips in terms of how to handle your business, what you can do, and what's best for you. And everybody's circumstances are different. So most of the stories I'm going to tell you, in fact, probably all the stories are going to be true life adventures of Barry. And you're happy to, as I say, post questions in the column. If I can be technical advanced, I'll pick it up and answer it as we go. But cash flow basically is the movement of money in and out of a business. Okay, now Lisa, my slides are not moving for whatever reason. I'm not sure why. Let me try this now. I had it moving earlier. Am I co-host or not?
Yeah, you co-host, so just press the down arrow maybe.
I did, but it's not happening.
And enter, not.
Okay.
There we go.
Yeah.
Well
So
done.
cash flow is thank you very much. So cash flow is the movement of money into or out of a business, a project, or financial product. So that's not too difficult to understand. And it's usually measured during a specific finite period of time. And so it's quite critical that you understand that the flow of the funds is very, very important. What I tell people is the following, that turnover is vanity. Turnover is vanity. Turnover is saying, oh, look at my business. I've got a 10 million Rand turnover this month, which is fantastic. And profit is sanity, because there's no point in having a 10 million Rand turnover and then finding that your profit is a negative. Then that's crazy. But the most important one is that cash flow is reality. That's the most important one. So turnover is vanity, profit is sanity, and cash flow is reality. Because if you do not have the money, you cannot do anything. You're dead in the water. You're absolutely dead in the water. So if you have a look here and you say, these are probably the most important page, and that I'm going to give you is probably this one here. Because why? You need to understand the numbers. Everything in life is about numbers. My kids are not doing accounting at school, okay? My late father was a chartered accountant in private practice. I'm a chartered accountant in private practice. My kids hated accounting. I told them they have to do accounting at school. I'm not interested. It was a non-negotiable. It's marks for jams, and everything in life runs around money. Whether you get your doctor's statement, your bank statement, your credit card statement, where you're going to pick and puke, whatever you want to do, you're going to find these places, and you're going to have to come across what does it mean to have all this money. So this is critical that you understand this page here, because this is going to be an incredibly important page in running your business. So as I said, you got your sales, and be careful with regard to sales that you're accounting for the sales correctly, that you've got the VAT correct, and that you're putting it in the right period. So you got your sales, which is fine, but your cost of sales is also vitally critical. And therefore, you've got your opening stock, you've got your purchases, and then you're going to get your closing stock. And therefore, you're going to get your cost of sales. That will then give you a gross profit. Now, that gross profit you'll see there is 40 on 100. So it's a 40%. Just by the by, I don't know if you're aware, but if you have a 50% markup, you've got a third gross profit. Okay, if you've got a half, you've got a third. If you've got a third markup, you've got a quarter profit. It actually works that way. 1/3 is 1/4, and 1/4 is 1/5. You'll see the arithmetic progression. But I'm not here to teach you the maths. I'm here to teach you about the accounting. And so it's very important that you make sure that you have a gross profit, because your expenses should be relatively well controlled. Now, you can bust your gut to save 100 rands on your cell phone account, and you can bust your gut to negotiate some packaging or some stationery or whatever from your supplier. But that's not where you should be focusing your efforts. Your efforts should be focused on getting the sales with a margin and then making sure that you're collecting it. That is what is absolutely critical. So on this particular page, I want you to bear in mind a few things. How your gross profit is made up simply of your sales net of VAT. Do not think, oh, I've got such a fantastic turnover, but half of it is going away into VAT, or part of not half, 1/115 is going away in VAT, or I'm paying a commission, or I'm paying packaging, or I'm paying railage, or for that matter. And by the time you come out, hang on, my gross profit is not as good as I want. One of the issues that I had with one of my clients is they said to me, oh, I'm doing fantastically well. And I said, well, I don't see that. Let me see how you're doing your costings. And what they were doing, they were giving a commission on the gross sales, but they hadn't factored that in. So when you put the commission into the cost of sales, they were actually making a gross loss. So you need to be very mindful of what you're making in terms of your markup and what other costs are there. So don't spend all your time on the 15,000 in terms of the expenses. Don't spend all your time there. Spend more of your time, okay, on the margins, the sales with a margin. That's where you need to spend your time. Obviously, you've got to look at your stock management and how you purchase and all of that. But it's your turnover with a nice margin is where you need to concentrate. So having said that, all right, there are a few ratios that are absolutely critical. The next ratio that I want to give to you, now you're going to tell me why this is not going, and then you tell me, there we go. The next one is the gross profit percentage. This is, soos hulle sê, uiters belangrik, extremely important. Why? Because this is telling you what is your gross profit percentage. If you know that you're marking up your goods 50%, which is a half, your gross profit should be a third, 33.3%. If your gross profit is coming out at something different, if your gross profit is coming out more, fantastic. I'm not sure how, but because there's something wrong in your accounting. But if it's coming out at less, it's telling you a number of things. It's telling you the following. A, not all your sales are being recorded, which means that somebody could be dipping their hands into the cash. Or it's telling you that your stock is not being well controlled because somebody's stealing your stock. Or it's telling you that you haven't accounted for all your purchases. And that is critical, because if your stock isn't there, and some of you are no doubt are in an industry where the stock is very saleable, whether it be technology, whether it be liquor, whether it be cameras, you don't know, but this stuff is all saleable. And therefore you need to watch that gross profit percentage, and you should know more or less what it is. Obviously, different items have different gross profit percentages, but if you've got a decent package, you should know how much you sold of what and what your gross profit would be. And obviously, your markup is going to be your selling price minus your cost over your cost price. That's your markup percentage. So if you buy something for 100 Rand and you sell it for 120 Rand, your markup is 20%. Simple, Simon. Nothing complicated about that. But you need to look at that. And let me tell you something about the pen. The pen is mightier than the sword. And the art of selling is to break it up into its component parts. So when a guy walks into a furniture store and he says, I'd like to buy a bed, you say, would you like a mattress or do you want the base as well? No, I want the base as well. Okay, so now I've sold them two products. And would you like a duvet? And would you like a duvet cover? And would you like a pillow and a pillow slip? And would you like a teddy bear that goes with it? By the time the guy walks out, he came in for a mattress, he's got a whole suite. It's the art of selling and breaking it up. But in every one of those products, you should be making a margin. And that is what is critical. So you break it up into its component parts. So make sure that you got a markup and make sure that you have a markup with a decent percentage. Very, very important. And then as we carry on, you'll see in terms of your liquidity ratios, there are two different liquidity ratios. The one liquidity ratio is a liquidity ratio which is called the asset test ratio, and the other one is just your normal liquidity. So the one is saying, if I have got in my current assets, stock, debtors, cash, and in my current liabilities, I've got my accounts payable and I've got my tax, for example, how much of my current liabilities are exceeding that of my current, how much of my current assets are exceeding my current liabilities. So if my current assets are 2 million and my current liabilities are 1 million, then I have a 2 times cover, which is great, which is where you should be. What is critical is what they call an asset test ratio, where you take out the stock, because the stock is not one that's so easily to be converted into cash. So I've got my debtors and my cash versus my current liabilities, and that ratio should be at least 1 to 1. So in other words, if every creditor knocked on my door, then I need to try and collect as much cash from my debtors and pay all my creditors without having to convert my stock into cash. That's where it is. So if you're looking at your business, you must make sure that you have at least 1 to 1 ratio in terms of current assets minus stock versus current liabilities. So that's a very, very important ratio. And the fourth important ratio, which I put up there for you, are your gearing ratios. And that's just telling you how much of my liquidity is tied up in terms of being borrowed from somewhere else. So if I've got a property that I've bought, well, let's say R1 million, and I've borrowed 600,000, then I've got a 60% gearing. I've only got 40% of my own funds in this business. So you need to see what it is. Now, I'm going to tell you something, and if you're going to tattoo anything on the inside lid of your right eye today, I want you to tattoo the following. It is the most expensive form of finance is to borrow money and give equity away. I'm going to repeat that because I don't want you to do this, and I'll explain to you why. The most expensive form of finance is to borrow money and give shares away. So what will happen? The guy says, listen, you guys go and I need to borrow R1 million. The guy says, sure, I'll give you R1 million, but I want 20% of your business. You think, oh, well, I'm up against a hard rock. I mean, what the hell can I do? I need the R1 million. I will give him the 20%. So you give him the 20%, which costs him nothing. You pay him back his interest. You pay him back his loan. 5 years down the line, you've worked your butt off. You've paid it all back. It's now your business. No, it's not your business. You gave him 20%. Now you've got a successful business. Now you want to buy the shares back. Now I say, sure, you can buy them back, but I want a decent price for them. So be very, very mindful that you don't give away shares in order to borrow money. Okay? Happily carry on. So having said that, what happens in the following situation? Can you make a profit and have no cash? And the answer is absolutely right. Absolutely can happen. Why? So I'm going to give you a classic case, as I say, a true life adventure from Barry. A client of mine was selling furniture. One of those, if you went along Woodstock and Observatory and Main Road or whatever, they were just full of furniture shops. And what would happen was that they would sell the furniture and they would have collectors going out, particularly to the C&D income group. The furniture was being sold to, and they'd go out to the township and collect all the money. So what was happening was that they would sell the furniture now and collect it over a 6-month period, which is great. So my turnover was fantastic. My collections were over a 6-month period, but my creditors, the guys that were supplying me the furniture, were giving me 30 or 60 days. So now I have a huge cash crunch. I've got money owing to me. My balance sheet looks fantastic. I've got creditors that I need to pay, which are not a problem because they're matched by my debtors. That's not the issue. The issue is that my debtors are going to be paying me over 6 months, and my creditors need to be paid over 60 days. That's called overtrading, and you need to watch out for that. That's absolutely critical. So then the question is, so where's my money? So if I've overtraded, and what do I keep money for? Why do I need money? What is the purpose of me having all this money? So then I say to you, okay, what types of cash do we need? We have 3 types of cash. We have normal transactional cash. This is money that we need for every single day. This is when we need to pay whatever we need to pay for. We need to have money in the bank. So when you have a situation whereby you've got COD orders, or you need to put, staff welfare, you need to buy some milk and sugar for the office, whatever, that's your normal daily transactions, whether it be in your business, whether it be in your private life, it doesn't matter. That's your normal transactional business. And then, of course, you need to have savings. You need to have savings because there will be a rainy day. Nobody thought that we would have a COVID-19 epidemic as we have now. And it's a pandemic. It's right across the world. It's a pandemic. But nobody realized how badly this would affect the people and their business. Some guys have done very well. The guys in the technological business are booming. I mean, you cannot get a laptop at the moment. My laptop, unfortunately, was stolen on Sunday night, amongst other things. But traumatic, I must tell you, but be that as it may. And what, in fact, has happened is that I can't get a replacement at the moment. And I spoke to a friend of mine who's in the technological business and sells laptops. He says, Barry, sometimes you can't get them for 6 months. It's just crazy. They can't produce enough because that business is doing nicely in COVID. Other businesses are folding. There were 5 coffee shops downstairs from where I work in town. 5 coffee shops, all gone because there were no people. So you need to have money for a rainy day. And unfortunately, what do we call them? I'm a baby boomer. So generation X, Y, Z, and AA, I'm not sure where they are at the moment in the alphabet. But what is in fact happening is that they want to live now. They're not interested in the rainy day. They don't see the rainy day, and they haven't lived it through a 1969 crash or a 2008 crash or the financial crisis, or any financial crisis. They don't understand that you need to have these scenarios. So you need to have savings and you need to have investments because you must not leave your money in cash. And I'm going to explain to you why in a moment. And then obviously you need some funds for an emergency because you can't have your money, for example, invested and now the roof is leaking and you've got to pay for a leaking roof or a car that needs a repair. And I need to pay for that car repair. And I'm sorry, I can't get the repair done because I've got a cash in a unit trust that will come in 3 days' time, but the guy wants to be paid now. So you need to have money for emergencies. Very important that you do that. It's important that you have money, as I say, for transactional purposes. You have money for savings and investments, and you have money for emergencies. Now, I'm going to tell you about why I don't like to keep money if I can possibly help it. The analogy which I haven't drawn, which I should have possibly done for you, which I apologize, but now you're going to use the power of the mind as opposed to me giving you all the items on screen. If you have a boat, a yacht, whether it be a little yacht or a big yacht, it doesn't matter. It's sitting on the water. And then you have the pier. Now, the water will obviously go up and down in terms of the tide. The pier is fixed. I'm saying the pier is money. I'm saying the water is inflation. And what happens is that with inflation, the water rises. The pier is fixed. So your purchasing power of your rand or whatever currency you got is going to diminish over time because inflation is going to eat it away. But if you got an investment, which is the yacht, whatever investment it is, it will rise with the tide, generally speaking, because that's what's happened. So all of you, no doubt, I know what it's like. I have 2 relatively young children, and they will not be able to afford to buy a house today. When I tell them what I paid for my house, they think it's laughable. It's laughable. They can't afford it. Why? Because they don't have that sort of money. And what's happened is that with the purchasing power of the rand, it's gone higher and higher. There are different schools of thought to say, do you own your own property or do you rent a property? Now, it depends. Some people say, and I'm not one of them, that it's better to put it into investments because your investment should be at a higher value later on than your property. Now, I'm saying that's fine, but I'd rather put all that money into something that I'm going to own at the end of the day. So there are different schools of thought. I'm not saying it's right or wrong. All I'm saying is that it's different, but don't leave your cash as cash. Put your cash into stock, but make sure that you've got enough to pay for what you need to pay for. Okay? So having said that, and moving on, what I want to tell you are the different forms of financing, because now I need money. I want to start my business. I need to grow my business, but I don't have money. I don't have the money. I'm not Rockefeller, and I don't have rich parents, or all my parents don't want to talk to me, or don't want to give me money, or they don't have money, or any of the above. And I've had all of them, by the way. So you need to now go and borrow money. So where can we get the money? So the first one is the equity. When we give people away, we give some of our shares away in terms of money. Now, as you've been blinking since I gave you that, you've been seeing that tattooed on the inside lid of your right eye, that this is the most expensive form of finance. And you please, please, do not go this route unless it's some last resort. And if you do have to go this route for whatever reason, then make sure you have an exit plan to buy back the shares at a price determined now. Because otherwise, you're going to be paying for those shares on the strength of your ability, on the strength of what you've done, while this guy's been collecting his capital back, collecting his interest, and now he's going to make a huge killing on the shares that he's going to sell you because you've been so fantastically in the business that you've done. Okay, all good so far. Please be mindful. I normally do this in front of an audience and I can see whether you are asleep or not, or whether if I crack a joke that you, or sometimes it's not a joke and you laugh, I mean, then I know where I am. But at the moment, I've got myself that I'm looking at, which is not that great, and then one or two other people. So please understand it. Just give me a shout out if there's a problem in any way, or just liaise with Lisa and we'll get from there. The next one is loan capital. So this is money that you're going to borrow from personal contacts like sharks or credit lenders. Not a good option. It's a huge, huge amount of money. And they charge an enormous amount. There are clients and people that I know that will lend you the money. And when I talk to them and I ask them about the interest rate, I mean, I'm thankfully I have a relatively strong heart, because otherwise I promise you I would have an apoplexy right there on the dot and keel over, because they are charging interest rates like 3% a month. So people say, but what's 3%? 3% is nothing. 3% is nothing. But I said it was 3% a month. In other words, they're charging 36%. Now that's massive. That's massive. But people aren't aware of that. We run a money market operation here called Legacy Nominees, and I'm the partner in charge of that. And we've got about 1.2 billion rand there. And I've been on the TV with the David Hirsch show, Brian Hirsch show at least. There's another, there is a David Hirsch, but this is Brian Hirsch on Money Talk. And he asked me a question. I said to him, Brian, before we go there, I want to just ask, I want to ask and explain something to you and your listeners and viewers. There's a difference between an effective rate and a nominal rate. And you need to understand the differences, because when a guy says to you, the nominal rate is 3%, but you don't have to pay me the money every month, I'll just ratchet it up. It means that the effective rate could be 3.3%, because it's like when you put money into, let's say, a savings account, a fixed deposit at 10%, and you put 100,000 rands. If you took your cash every month, you would have earned over a period 10,000 rands. That's simple arithmetic. 100,000 at 10% is then 10,000. But if you said, no, let the interest earn interest, I might get, let's say, 10,500 rands at the end of the year, which means that the effective rate is not 10%, but 10.5%. So be mindful that you understand the difference between nominal rate and effective rate. Okay, so loan capital, not great, but you may have to be forced to get to that scenario, but that's fine. If you have to deal with it that way, we'll deal with it that way. Personal loans, if you've got an uncle in the furniture business, if you know somebody that can help you out in some way, that's fine. Business loans, also, just make sure that it's well structured. I'm going to get to a slide later on which will tell you need to stick to what you need to do. Employ the people that you need to employ to do, so that you can do what you're best at, okay? And let me tell you about a credit card. A credit card, and my late mother said that, Barry, I hope that you're not still telling that joke to the people that you speak to. And I used to say, Ma, I still think it's a good joke, but she wasn't very impressed, okay? I used to say to my late mother, Mom, when it says the credit limit on the top right of your credit card, I used to say, Ma, that's not a target. That's not a target, okay? So remember when they say credit limit, and then they say minimum payment required, they're only too happy for you to pay the minimum amount. They are delighted that you only pay the minimum amount because the balance is attracting an interest which is absolutely exorbitant. So if you had to look at where you've got money, you need to pay off the loans that are attracting the highest interest rate, but be very careful that you don't have to pay a penalty for early settlement. Because sometimes if you've got, let's say, a motor vehicle, and now they've worked it out that you're going to be paying off this motor vehicle in the next 6 years or 5 years or 3 years, whatever the case may be, but you win the lotto or you get some inheritance or whatever the case may be, and you want to go and pay it, they say, fine, I'll take it, but you're going to have to pay a penalty. So be careful of those scenarios, please. Very, very important. And this slide here is what I was telling you about a moment ago. Administration is absolutely important. And I'm just going to grab one of the papers from my folder here, which I tell my clients on a regular basis, that it's very, very important that you understand that the job is not complete. The job is not complete until the paper, oh, that's the wrong one. Sorry, I'll get you the right one. The job is not complete until the paperwork is done. That's the one I wanted to show you. I'm so sorry. Okay. The job is not complete until the paperwork is done. All right. Very important. Very, very important. And therefore, the absence of paperwork, if you can't, because you're not an accountant and you don't understand books and you can't do what you need to do, then you need to look at your bank balance, because your bank balance is going to be your barometer. And if your bank balance is creeping up, then you're doing something right. If your bank balance is going south, there should be warning bells and alarms and, you know, the whole thing going off. There's something wrong. And let me, this slide, the last point here on this page in terms of administration is very, very critical. Don't spend your time doing the admin and losing out on sales with a margin, Rather say, I'm going to go out, I'm going to get those sales, I'm going to beat down the people's doors, and I will pay somebody to do my paperwork for me. Because A, I may not be good at my paperwork, which is often the case, and B, I can make more money doing those sales than I will doing the paperwork and saving the cost of having to pay somebody. So if it costs you 1,000 rands an hour, let's say, to let somebody do the paperwork, and you can make sales which is going to make you 3,000 rands an hour, I'd rather go for the 3,000 rands an hour and pay 1,000 rands to let them do the paperwork. It's axiomatic. It's simple, Simon. It's easy stuff to understand. Nothing that I'm telling you is complicated, but let me tell you, it's very practical and it's very workable, and it's something that you need to take into consideration when you do whatever you do. So how can we improve our cash flow? Because that's quite important as well. So if you look here, I'm saying here what we can do. We can take advantage of discounts. Let the people give you a discount. When my late father was running this one guy's books, my dad was very ill at one stage for quite a while, and I took over, and I didn't know whether he took any discounts from this guy, because what my dad was also doing was doing all his home office work for this particular doctor, and he would bring the concertina file with all the invoices, all the statements, all the things. He was doing the doctor work. My dad was doing all the bookkeeping and accounting. So I took this all over. I matched this invoices to the statements. And then I took a piece of paper and I took 10% on every single guy that I paid. I didn't know how much discount my dad was taking or not, because nothing was recorded in a separate ledger or anything. So I just took 10%. Three things happened. Nothing. And therefore I just took 10%. Every time thereafter. The guys came back and said, sorry, you can't have any discount. I said, no problem. I'll pay you the balance next time. Or the guys came back and said, sorry, you can't have 10, but you can have 5. Now, that is direct bottom line profit. Discounts are bottom line profit. And just like we're taking discounts, be very mindful when you give discounts. So you can add for a discount. So you say, listen, I would normally have sold it for about 1,000 rands, but I'm going to charge him 1,100 rand and tell him he's got a 100 rand discount. The guy thinks he's getting a discount. You're still getting your price that you want. Add for the discount, but take the discount when you're paying. Obviously, if we got deposits before we do the job so that we're not out of pocket, because sometimes they don't pay the balance. Then you're not out of pocket for your materials, whatever. I have a client, and he basically, he's selling stuff now. I mean, the business is absolutely flying from a garage. He's employing, from a garage, he's now employing over 100 people, and he's sending out container loads every month, okay? Container loads of a product that is no bigger than probably the tip of my pen, okay? And he says to these customers, I know myself, I don't know you. You want to do business with me? Lovely. You put the money in the bank, I send the product. You don't put money in the bank, I don't send to you. Have a nice day. And everybody that's put money in the bank, he send them the goods, no problem. And they built up a relationship like that. But he wasn't scared to tell them, sorry, don't know you. Don't get the money, I don't pay the goods. So be tough, because I promise you, when they owe money, they're not going to pay. When you owe money, they're going to come and collect. Do credit checks for some of these people. There's so much information on the web at the moment you can get, and there's ITC that you can check. Be careful that you don't get caught. One of the things that happen is that a guy comes and says, listen, you don't know me, so let's do COD. So we do a COD and he pays. You do another COD and he pays. And then he ratchets up from 1,000 to 2,000 and he pays. And from 2,000 to 5,000 and he pays. And he says, can I now open an account? I've got a credit record. You say, sure, you're fantastic. I mean, it's been brilliant. He says, fine, open an account. You give him an order of 10,000 rands, whatever the value is, gone, history, never to be seen again. So be careful of those sort of charlatans, and they are out there. That's a true life adventure from Barry. Invoice promptly. Invoice when the tears of appreciation are still in the client's or the customer's eyes. He's not going to remember how you bust your gut to get there at 2 o'clock in the morning to fix a leaking pipe when you send him the bill 3 months later. It's, you were here for 10 minutes, man. The fact that you got out of a nice warm bed where you were struggling with your spouse or whatever and you left screaming children, doesn't matter. It was 10 minutes. Why can you charge me this? Bill when the tears of appreciation are still in their eyes, and keep track. And that's where you need to get your bookkeeper or yourself to make sure that they pay. Don't keep supplying somebody if they're not going to help you, okay? If they're not going to pay. And then when it comes to your creditors, take advantage of the payment terms. If the guy doesn't offer you, take it. Take 10%. Take a discount. He's going to come back to you and say, oh, who do you think you are? I didn't offer you 10%. I don't. And as I said, he'll offer, say, nothing. I want all my money. I'm not giving you 10%. I am giving you 5%. But take advantage. And obviously now use EFTs. There's no other way. I have lost a 5,000 pound check. It was intercepted somewhere along the line and was banked on the 30th of December. I don't know where, I don't know how. And when I speak to the guys in the UK, they say, sorry, no EFTs. I mean, it's just crazy at the moment. It's just mad. But we in our banking world are very, very sophisticated. And thankfully, the guys that stole my laptop tried to get into one of my banking accounts, and the fraud division got hold of me. So the guys are sophisticated out there. Be careful that you don't leave your passwords, and be careful that you don't leave the ability for somebody else to pay on your account to somebody else. You must do the pay away. You must do the collections. You are responsible for your business. You must be the balabos or the balabosta. You must be on top of your game. There's no question about it. Don't let somebody else get access to your passwords. I would have trusted them with my right hand. They were my right hand person. I would have trusted them with my life. Those are the ones that you need to worry about. Okay, I will tell you. I've got one extra slide there, but I'll tell you a quick story. I had a client of mine where I was doing a job as a young audit clerk out in Philippines. It was a nursery. It was winter. It was cold, and they put me in the bloody garden shed with moss on the ground. I was freezing. They used to give me coffee with like this ploika on top, like this milk that it was revolting. To this day, I keep an extra pair of socks on me because my feet were freezing. But I said, and those are the days when gift vouchers just came out. It was a new thing that came out, gift voucher, token voucher. And I said to my client, I'm worried about this woman. There's something about her. I don't trust her. No, I think she's fantastic. I said, but you've got no system, and you need to have systems in your business. That's what I'm saying to you as well. You need to have a system. There were the gift cards were not numbered. There was no register. There was no like control of it. I said, I'm worried about the gift tokens. I had to leave the job because he was leaving for overseas. It was in July. I came back in November. Thankfully, it was a little bit more warm than it was previously. And in speaking to him, I said, what happened to that lady? He said, no, I listened to what you said. She was stealing the cash. She was putting in a gift token and taking out the cash. So you need to have a system. The story has a corollary, by the way. I went to go see a husband and wife client of mine. They work as a team. They both unfortunately passed away since then. I've been in the game a long time, as is clearly evident. And what they said was that they got a most incredible bookkeeper. And anyway, I normally go out and see clients and, just to see what's happening in the business and what the stock levels, what the production, what they're going on, etc. I walk in and I see this woman and I say, hello, how are you? I said, I know you. I know you from somewhere. I've met you before. Your face, I know your face. She says, yes, I used to work for that nursery out in Philippines. I said, that's right. I say nothing to the wife. I say to the husband, you got to be very careful. I'm not saying that she hasn't done teshuva. Maybe she's turned over a new leaf, but I've had an incident with her. Just keep your eyes and ears open. The next day, I had an earful from the wife. What do you tell my husband? What do you mean what I tell your husband? What do you mean what I tell your husband? So what do you tell him about this bookkeeper? She's the most brilliant bookkeeper I've ever had. I said, I told him, keep your eyes and ears open. As the one guy says, 210. You know the code 210? When I used to work in a pharmacy, there was a code called 210. If you saw somebody that was suspicious, 2 eyes must watch 10 fingers. Okay, it was called 210. So I said to him, you must watch. You must watch. She said to me, she had gone to the bank that very day. She had put money in her purse. And when she got home, the money wasn't there. And she would never, ever have suspected this woman. But yet she had stolen from her as well. So that's just a corollary, a quick story there. So you must manage the way you pay your cash out as well and take advantage of them. And don't keep your stock too high. So this is what I want to tell you. Keep your stock to a minimum. Don't you be the stock holder. If your supplier can give you the stock in a moment's notice, then take advantage of that. And look at where you've got extra cash, put it into a money market account. Move your cash around. Do not leave it in your current account. It's earning bugger all interest. Sorry, it's earning no interest whatsoever, okay? You must take it and put it, and if you need it, you put it back into your account, pay all your creditors. Take the discounts that you are granted and take them, and if they haven't been granted, take them and see if they will grant it to you. Look at the interest rate that you're paying. 2 or 3% a month is high. It's high. And pay back monies with the highest interest rate first. Pay back the monies with the highest interest rates first. And be careful that there are no penalties in paying back early. Look at your internal controls. Be careful in terms of internal controls. You need to have division of duties. Most of you are probably running businesses whereby you can't employ people to have different division of duties. It will cost too much. I accept that. But then you need to be more hands-on. You need to have that 210 approach. Watch the 10 fingers with the 2 eyes. Do not give them access to the banking account. Credit card financing, horrible. Get rid of it as fast as possible. Pay the full amount on the day it is due. And in that regard, also, when it comes to VAT, when it comes to pay-as-you-earn, when it comes to provisional taxes, pay it before the due date, like a day or two before, in case it bounces or whatever. The moment you don't pay it on time, whether it be a day late or a month late or a year late, is a 10% penalty. It's taking the money and peeing it against the wall. Do not pay your taxes late. VAT, pay-as-you-earn, or the provisional taxes. All right? And then look at the way your bank charges are, they're crippling you possibly. Go and negotiate. Go and talk to the people. Go and say to them, listen, I'm not paying these bank charges. What better rate can you have? Play the one off against the other. I promise you they don't want to lose you in a hurry. They'll keep you. And as for personal banking relationships, I don't know who my personal banker is. They got a name on the account. I don't know what they look like. It's a myth. It's a total myth. There's no personal bankers anymore. Not like the old days. And chase the turnover with the margin and save on the costs. That was the very first slide that I spoke to you about. and budget. Be careful that you don't overtrade. Be careful that you don't overspend, and make sure you got enough money that you have for whatever you need to have when you need to pay it. And don't forget that you need to pay your taxes, including VAT, on time, and your turnover must be worked out without the VAT, so that you can then see that you've got your VAT is not in your turnover figures, so you can see what is your true turnover. And then be careful when you pay out a commission on a sale, because that's also taking money and throwing it away. I will tell you though, and I've said it many times, I'm not uncomfortable if my commission agent earns more than the managing director. I don't care if the commission agent earns more than the CEO, because it means he's making fantastic profits for the company. If your numbers are done correctly, of course. I mean, I'm assuming that he's got the turnover with margins. And then be careful when you pay from your own account as opposed when you pay from your business account. Because if you don't do that, then what may well happen is that you've got expenses that are not being brought into account in the books of account, and therefore you're not deducting the expenses that you need to deduct, and therefore you're not paying the taxes that you need to pay. You're paying more than you need to pay because you haven't reflected the amount that's been paid out of your own pocket. If you do need to pay something out of your own pocket, because let's say you don't have a credit card for the business, but you're using your own credit card, no problem. Two things must happen. Ask them to please make out the invoice in the name of the business, use your credit card to pay, but when you get back to the office or home, wherever it is from where you're working, take that bank account of yours, of the business, and refund you the amount so that you keep track of the expenses along as you go. All right. I know I was 45 minutes opposed to 40 minutes. I don't mind spending more time, but what I want to say is thank you for your participation. I hope that I've given you food for thought. I hope that I've kept you entertained and educated, and that you only tattooed one item on the inside lid of your right eye. And I hope that you can remember it. And if you've forgotten it, that'll be very disappointing. But it was to say that you must not give equity away when you're trying to finance your business. That's what I said. But I'm happy to take questions, and I thank you so much for your participation. And Lisa, thank you so much for inviting me.
Barry, thank you. That was awesome, thorough, clear, great understanding. Appreciate your time. Now the floor's open to the entrepreneurs that are with us. Please ask Barry your questions that pertain to your businesses. We've got 15 minutes, so let's use this time. I think something's come into the chat box. It's not a question, it's just saying thank you. That was great, much appreciated. Neil, have you got any questions for Barry or anyone else? You can unmute.
Barry, just wanted to ask you, are there any tips or tricks on how to work out a markup or a margin, and also calculating commission, how to pay commission? Any ideas or suggestions?
I do not suffer from doxophobia, okay? In fact, no members of my family suffer from doxophobia. There's a difference between a doxy and doxophobia. A doxy is a loose woman, and doxophobia is the fear of expressing an opinion. So the answer is yes, I do have an opinion on what one can do to answer your question there. So the first thing that my uncle would say, when you go into an optometrist and the guy says, I'm coming for a pair of glasses, he says, that'll be 1,000 rands. If he doesn't blink, you say it's for the frames. And then it'll be another 500 rand. If he doesn't blink, he says that's for the left lens. If he still doesn't blink, then you say another 500 rand for the right, until such time say, oh, whoa. That's not good enough. No, I can't take it anymore. So you need to push it. But you must understand, as I said, the pen is mightier than the sword. And when you're doing something, if you mark it up another 5%, 3%, 10%, you know, it's the same thing when I was the treasurer of the Shul, for example, and I said, although we had money in the bank, you need to increase the fees every year. Those that can pay will pay. Those that can't pay will still not pay. But at least you're getting the money in. So you need to push the boundaries. You need to see what your margin is, where your niche market is. What would happen if you had a different amount? Would they pay it? Would my sales drop? Would I spend less time, like the Pareto principle, 80% of the sales from 20% of my items? So, you know, what can I do to sort it out and streamline my business? So I'll just tell you another true life adventure from Barry. I had a client of mine that I'm going to use royal baking powder as the example. He was taking royal baking powder and putting it into royal baking powder, and he was putting it into, let's call it princess baking powder. And I said, why you got these two different products? He says, because when the person comes into the supermarket and they see their two products, he said, there are already two products in the market. I can't come and make my third. And they got different pricing, he says. They're exactly the same product, but got the different pricing because some people believe that the more expensive one is the better product. It's a psychosis that we've been brought up with, which is not necessarily right. So I told my late mother that no matter what if she goes to the supermarket, if she buys Princess or Royal, doesn't matter, buy the cheaper one because it's exactly the same. I've seen it coming out of the same drum. And the interesting thing was that she had a friend who considered herself to be the best baker south of the equator. In fact, I think she probably thought she was the best baker in the world. And she told my mother that when she uses royal baking powder, her cakes come out very nicely. But when she uses Princess, it's just not the same. So it's all in the mind. So you need to push the boundaries. You need to increase it as much as you can and how much you think you're worth. And sometimes we don't believe we're worth it. So you need to sometimes work on the product, because why would I pay X for that? But I might be paying X plus somewhere else. Now, why would I go there as opposed to you? So you must believe in your product. You must be strong behind your product, and you must be able to, it must be valued in the eyes of the people that are buying it, never mind your eyes. With regard to the commission, it depends how you want to do it, but you need to understand that the moment you pay out a commission, you are damaging your bottom line. It's money that you're paying away. It's a direct expense. So you need to be mindful of it. What I do like to do is to incentivize staff to say that if you do turnover, let's say of 100,000 for the month, I'll pay you, let's say 3%, or let's say 5%. If you do over $1 million, then I'll pay you another 4%. And I'll incentivize him to go more, because if there is money there, if there's value there, if there's margin there, then I can afford to pay him more. But there's no to answer you, is that Chantel, is that it's not a situation whereby it is hard and fast. Everybody's different, but don't make fish of one and fowl of another. Be careful that you don't have one commission agent earning X and one commission agent earning Y, because they can both be doing exactly the same job and both busting their gut. So just be mindful, because they do talk. People think salaries are sacrosanct. You might as well put it on your blog. All right.
Okay. Thank you.
Barry, just carrying on from Chantel's first question regarding, if you're a service industry as opposed to selling a product, how do you've got to value the service and the experience and put a price to that. So that also becomes quite challenging. So how does that kind of either manipulate the margin, or what is the impact there?
Okay, so to answer that question, that's what I do. I sell time. And I always say to the client, it's very hard to sell the time, because sometimes they don't understand that it's not tangible. You don't walk out. You go to the shoe shop and you buy the shoes, which I sometimes think the shoe prices are just, never mind, let me not go down that road. But what I'm saying is that what will happen is that you need to charge what you're worth, and it's not tangible. So if it is something that you can give to the guy when he leaves, for example, with my industry, we're going to, at the end of the day, do a tax return, or we're going to do a set of financial statements. So I always say you need to send the set of financial statements with an invoice. That's a psychological side of it. You need to send it with an invoice, and you need to break it up, because when you give a guy a bill for 10 grand, he says, geez, are you crazy? I don't see 10 grand's worth of work. But when you say, doing your tax return, I'm just using this as an example, tax return, 2.5 grand, liaising with revenue, 400 Rand, financial statements, 5,000 Rands, and you itemize it out, it doesn't look so bad. It's like when you go have your car service and you get all the itemized, oil, spark plugs, dirty rags, 40 Rand. I mean, you've got a bill of 5,000 Rands, they've got 40 Rand for bloody rags. You could have thrown that in. Nobody complains, because what's 40 Rand on a 5,000 Rand bill? And that 40 Rand is straight bottom line stuff, huh? That's straight bottom line stuff. But you need to charge what you are worth. And what you need to do to be mindful is that pricing our services and charging appropriately is one of the most important skills in the management of any service industry. And it's a major problem that all firms and all people are suffering today. And that the major problem is attitude, because too many people feel that there's something immoral about charging more than their standard rates, or that they're scared they're going to lose clients if they charge fees. I say to clients quite succinctly, if they fire me because I gave them bad service or bad advice, I'll go into a depression and I'll be very upset. If they fire me because they think I'm too expensive, I take it as a badge of honor. Really, because I've got other clients that I'll look after. I'm not worried about the pricing so much as what I'm more worried about the servicing. If you're going to keep chasing the money, and in an industry where you're not happy, you'll never be happy, no matter how much money you've got. You've got to be somewhere and working in an industry or in a firm or in an environment where you're happy, where you're passionate. If you've got the passion to do what you're doing, then it's not a problem. I've been here for 40 years. Okay, believe it or not, I started my articles in this firm in 1982, a long time ago. I don't believe that I've had 40 days where I've got out of bed and said I don't want to come to work. As my kids would say, yes, Dad, you're a square peg in a square hole. Because that's how I feel. I'm very fortunate to have done this. But these are the things I want you to understand and think about. Does your client, I'm using it as a client because you said a service industry, does your client or customer, do they need you more, or do you need them more? Because that's critical. If you're reliant on that customer, you're going to bust your gut, and be careful that they don't try and manipulate you because they know that they've got you over a barrel. Like the guys that were supplying Woolworths. Woolworths became their 100% customer. When Woolworths said, thank you, Charlie, I don't want your product anymore, that client went bust. There was no other alternative. And you don't have to justify everything you do. It's not necessary. I've had clients that want my whip. They want to see how much time. Why did I spend? Why? I don't have to tell them all of that. It's not. That's what my price is. You don't like my price, go somewhere else. It's not a problem. Okay. And your price for all services by the hour to remain ethical, must you do that? This is a philosophical question, and you need to have a look at this and says, if I do a job for you and I've done all the research which I had to, etc., and the bill came to 20 grand, I did all the research on a tax matter or whatever because of the poser that you gave me, and I charge you 20 grand, and tomorrow another client walks in and asks exactly the same question, and it's going to take me 5 minutes to give him the answer. Do I charge him for the 5 minutes, or do I charge him the same 20 grand again? Because the value of what he's getting is the same 20 grand that I gave the first customer. Why shouldn't I be charging the second customer the same 20 grand? And we feel, we can't. No reason not to. So you need to be careful of that. And then should you do the job first and worry about the fees later? That's a failing of mine because I forget to bill, or I've done a pro bono, or I forget. I don't sometimes listen to all my advice that I give, and I don't bill while the tears of appreciation are still in their eyes. But you need to work out when you're going to get your money, as I said. And if you do extra work, charge for it. How many times I don't know if you've done any building alterations, but I have done a few in my time. And I promise you, every time, this is a variation order. Another variation order. I said, what are you talking about? You were chasing the wall. Instead of chasing it here, I'm asking you to chase the wall here. No, sorry, that's a variation order, another 2 grand. And then you say, well, the job is costing me 2 million. Why must I argue for 2,000? But it's all right on the one side, but not all right on the other side. And then, do you use last year's fees as a guide, or do you look at it from a zero-based budget? And do you write off your mistakes, or must they pay for your mistakes? But what we need to do is, you must understand, is that people do, if you have placed yourself in a position where the people like you and trust you, then you're in a fantastic position. And I think it's all about service and it's all about trust. I'm telling you now, I will pay over the odds for somebody that I can trust, because that person is going to be vitally important. I do not want to allow a plumber, a carpenter, electrician, if I can't fix all those things myself, into my house if I don't trust them. Trust is fundamental. Don't let them think and let them feel that you're there for the money. Because if you're there for the money, you're a commodity. I can go anywhere because there are other people. Why am I, people say, are you expensive? I say, yeah, I'm expensive. I'm not the most expensive. I'm not the cheapest. That's for sure. But I will give you the best service that I possibly can give you, and I will go the extra mile. And that is why I'm invited to weddings and bar mitzvahs and whatever. My wife says to me, but I don't know these people. They're my clients. She doesn't know because I keep everything confidential. It's also quite important. But you get invited to all these things and what have you because they trust you, and that's most important. Don't let them think, oh, and I have a client who's a very wealthy fellow, and he feels that everybody's out to get him because he's got the money. You mustn't let your clients feel like that at all. Okay. Robert Kaisera. I'm Robert Kaisera in his book Rich Dad, Poor Dad, if I remember the name of the book. He of the philosophy, and I agree with him to a large degree, in that you need to buy property. He's playing Monopoly with real money. That's what he does. Where I don't agree with him, and I don't know who EP is, but I'm happy to chat to EP. That was my late mother's initials, by the way. Robert Kaisera says you mustn't own your own home. I'm in disagreement with him. The other stuff is, yes, I agree. I have no problem. You should be owning property. It's nice to build up a portfolio, but be mindful that when there's no tenant, you still need to feed the monkey. You still need to pay for the bond and the rates and the levies and the security and everything else that goes with it. So it's all very nice when you've got a fantastic tenant and everything's going geschmack. That's fantastic. Nobody worries about it. But when the monkey is going to have to be fed, you must have that emergency money that we spoke about in order to feed the monkey. And with regard to financial statements, reading financial statements is unfortunately an art that most people don't know. It doesn't mean to say you can't become very wealthy. I have some very wealthy clients. I look at I go through the financial statements with them. They say to me, Barry, where must I sign? I don't know what you're talking about. They've made the money. They've made some stinking money. I mean, I'd like to be on that side of the table as opposed to so I can read the damn financial statements, but I don't have the money that they've got. So I'd rather have the money that they've got than read the financial statements. But I think it's a great art. I think it's very important. And that's why that's one of the first slides that I showed you in terms of sales, cost of sales, the makeup of the cost of sales, gross profit, expenses, net profit is very, very important. But doesn't mean to say that your balance sheet is not important. Your balance sheet is critical. So the art of reading financial statements, maybe that's another lecture. It won't be one lecture, but that's one. And yeah, and Lisa, I'll tell you about another lecture which I'm happy to give to the group if they want me to, if you guys want me back, taking a long time.
It's awesome.
Larry,
Thank you.
Larry, just trailing on that question, if you own property, then should you pay off your bond as quickly as possible, or should you keep a bond?
Okay, so to answer that question, there is multi. One is, if you have your own home bond, all right, if your bond on your house is still in existence, then that's the one you must pay off first, because the interest you pay on your home bond is generally not tax deductible. The interest that you're paying on a property, investment property, is tax deductible. So the first bond you pay off is your home bond. So if you bought, let's say, a property for R1 million, and you bonded for 800, and you've paid back 600. Okay, so your bond is only 200, but you have a bond on your house for 500. Rebond the business. Take out the business bond to pay, and take it out to give to your bond, so that your bond is killed in your personal hand and the bond in the business is tax deductible. Does that make sense? I got that blank stare there, Chantal. I don't like a blank stare.
So are you suggesting that, what are you saying is tax deductible if it's held in a company? So let's say an investment property. Investment property, it's got a tenant.
Yes.
It's not.
The interest that you pay on that bond, the interest you pay on the bond that has got an investment property is tax deductible.
Must it be in a company, or can it be?
It does not have to be in a company.
Okay.
And I'm saying you've got a property, it's held in your own name, you've got a tenant in there, and you've got a bond in there, that bond interest is tax deductible. No problem. But you've got a home bond, which you bought your own home, that interest on that bond is not tax deductible. So what I'm saying is, make sure that your bond on your investment property is as high as possible, and take some of that money from the investment property bond into your personal bond. So that your personal bond goes lower, your investment property bond goes higher, so that the interest that you're paying is then tax deductible. That's all. It's just rearranging your cash in the best way possible. Give me a call, I'll
So
have
to
to go.
keep a bond,
Sorry?
keep a bond. So would you always keep a bond? Sorry.
If you've got no house bond
Yeah.
and you got a bond there, you don't borrow money at 3% to pay 5%. If your bond is at 5%, you can only earn 3%, then you must pay back your bond. You borrow at 3 to earn 5. You don't borrow at 5 to earn 3. Digest that. Call me. All right.
Okay, let's close it off there. Some incredible words of wisdom, and thank you for bringing in the value of trust and the importance of it, because it really is fundamental to doing business. Barry, that was great. I will share the recording with everyone and your details. So thank you, and wishing everyone a good Shabbos, and keep safe. Please all keep safe. Thanks so much. Your phone.
When you're back in 2 minutes, Cheryl.